Thank you for joining us at xm.com for this Forex Preview video. I'm Christina Marujos, and joining me today is lead investment analyst Rafi Boyajian. We'll be having a look at China PMIs coming out this week. Undoubtedly, Rafi, PMIs for September out on Thursday will attract a lot of attention as the latest headlines out of the country are far from encouraging, suggesting that growth is losing momentum. What are we likely to get in the PMI report, and how serious are the risks facing the Chinese economy right now?
Well, Christina, there are a lot of worries about a slowdown in China. We have been seeing the manufacturing PMIs, both the official PMI and the cash-in PMI, steadily decline since late 2020. In fact, the cash-in PMI fell below 50 in August. And although the forecast suggests there might be a slight pickup in September, it's still expected to remain below 50. So that suggests contraction. So at least the private survey is clearly indicating some contraction in the manufacturing output in China, and the forecast overall might be slightly on the optimistic side given the latest headlines that we've been getting. Businesses in China are facing a lot of headwinds, and so we already have the global supply shortages that have been causing pain for manufacturers for some time now, as we've seen the prices of key commodities and components surge in recent months. But China is now also seeing significant power outages across the country, which could further hurt growth. Now, the electricity shortages in China are partly the government's own making, because authorities have imposed tough emissions targets to keep pollution down ahead of the Winter Olympics in Beijing in February next year. But energy companies have also been struggling because of the global shortages in coal and natural gas. And if all this wasn't bad enough, we also have the regulatory crackdowns that have unnerved investors. And now, of course, there's the Evergrande crisis as well. And that potentially poses a risk to the wider economy if its collapse sparks the domino effect across the entire property sector.
Despite all the worries, though, we've yet to see the Australian dollar take a direct hit from all the negative headlines coming out of China. Do you think investors may be underpricing the risks from China, or are fears of a major crisis overdone?
So that is interesting, because we've seen the Aussie come under pressure from the stronger US dollar and broader risk off episodes in the markets, but we've yet to see a huge sell-off in direct response to the developments in China, which could become a notable drag on the Australian economy as it tries to recover from the lockdowns. This could imply that investors have already priced in a slowdown in China, or they don't think this would have a significant impact on monetary policy in Australia. However, it could also mean that markets expect the Chinese government will probably step in to prevent a major fallout, whether it's the energy crisis or from Evergrande. So unless things were to get much worse, the Aussie will probably be following the broader market mood. But of course, we shall have to wait and see.
Rafi, thank you so much for being with me here today. This was a Forex Preview on China PMIs coming out on Thursday here at xm.com.